Welcome back, and joining me with more insight on the day's trade is Jordan Toy from Legacy Family Wealth. Thank you so much for your time, Jordan. There's so much that is happening right now. Not a lot of company news, results and the like, but we do have a lot of macroeconomic news coming through. Of course, U.S. Liberation Day is here, and then locally we also have the budget proposal that is yet to be agreed on. I've seen no pressure heavily on the rand. Just talk to me about that.
I don't think that there's much other explanation to it other than the nervousness that's coming around, sort of the, I don't want to say fractures in the GNU, but some of the disagreement that we're seeing. And, you know, this is obviously the first time that we've had a budget that's not sort of sailed through, if I can say that. So, you know, at the sort of nth hour now, we're seeing some of that weakness in the rand, potentially what that means for the GNU. Does the budget get through? That nervousness just feeding through into the currency.
I heard that also some people fell asleep before as the bell rang for them to go and vote, and now there was a squabble about that. So very, very interesting things that we are looking at here. Well, as we're also talking about Trump tariffs, of course, we know that Elon Musk is a big figure in that, as he runs that government department for efficiency in the US. Of course, his role politically also seeming to affect how investors have seen Tesla. I actually just saw a headline on CNBC International saying that Tesla shares rise on unconfirmed report. Elon Musk could be leaving Doge post soon, but of course we will be digesting that at a later stage. But there was an update that came out of Tesla, not looking good.
Yeah, so obviously that's brand new, that news around Department of Government Efficiency. We'll have to see what pans out there. But in terms of Tesla as a business, not a great first quarter, both from the share prices perspective and from vehicle deliveries. So Tesla doesn't announce vehicle production figures. The deliveries is the closest sort of number we have to sales. But we saw sort of near about 13% drop in those vehicle deliveries in the first quarter. There's obviously an exceptional amount of negative publicity and headlines around Tesla, right? Mostly due to his closeness to sort of the US president, but we're seeing protests, we're seeing Teslas get burnt, so a lot of negative headlines around that. So I think that's got to have an effect on those numbers in the first quarter. To be fair to Tesla, though, they are sort of upgrading and doing some work on their various manufacturing lines for the release of sort of their refreshed Model Y. So I think in all fairness, that's probably had an impact on the numbers as well. But yeah, it's quite an interesting day for Tesla.
Very, very interesting day for asset managers as well. I do realize that a lot of people are kind of repositioning themselves with the end of the first quarter and beginning of the second quarter. And 91's been actually quite busy. They've been shopping on the JSE, and I actually saw that they added TFG shares to their bag of goodies, now having a stake of 10.09% in the clothing retail, although I did see that the stock was down almost 3% the last time I checked. But just looking at TFG's positioning, is this one of the retailers that are fit for growth in this kind of economic environment?
I certainly think one of the better retailers in that sense, positioned for growth rather. I think their digital offering or their online, you know, their Bash platform is very strong. They've got a nice mixture of brands in there across a variety of different sort of, I think sectors is too broad a term, but a lot of different products within their staple. But yes, I did see a lot of those announcements. It seems like the new quarter rolls around and the asset managers are quite active. So I saw they were trimming, 91 trimmed their stake in Raubex as well.
Yes, which is interesting because yesterday they added and their stake was about 6%, and now today they've trimmed on Raubex. I don't know if I should be reading anything into this or if it's just them kind of rebalancing their portfolio.
I think it's difficult to read too much into it. Obviously, they've got to announce this or notify the company in question in a relatively short space of time. But a lot of these asset managers are running a lot of different funds with a lot of different strategies. So, you know, while you might have a somewhat consistent view across the entire asset manager, funds are pursuing different objectives. So I'd be careful in reading too much into it. But naturally, you know, a new quarter rolls around. They've obviously been looking at some things for quite some time and potentially pulling the trigger on making some changes.
Yeah, and they still have an almost 5% stake in Raubex. Let's talk about gold because another asset manager that's been busy is BlackRock. They're digging for gold. So they acquired a further interest in Harmony Gold. So now they hold a 5.02% interest. And this is even though we have seen quite a lot of upside on the counter. And I mean, just that gold sector in general. Is there more juice to be squeezed here?
It's a difficult one. I was having this discussion with a client earlier today when we were looking at when we were talking about it, the gold price was in the 2000s. Now we're over 3,000. So it's had a very strong run. It's at all-time highs. And in terms of BlackRock specifically, I think obviously they run a lot of passive index tracking funds. So it could be a case simply that, you know, Harmony and the likes of some other gold producers now account for a larger portion of that index. They have specific rules and periods over which they rebase some of these indexes. And obviously the passive funds tracking that may also move, so it could be linked to that.
Okay, very, very interesting moves that we are seeing here. Let us go to your stock pick. I was going to talk about Northam Platinum because also Standard Bank let go some of its shares in Northam Platinum. Of course, we know the difficulties that the PGM sector has gone through, but I was just wondering also this time when a lot of people would maybe be going into PGMs.
Difficult one to read into. Like I said, with 91 is another example, right? They've obviously got their own internal views on where they want to be positioned and how they want to be positioned. It could be that there's a slight change in their view on the world. Commodities themselves are naturally very volatile. So a difficult one, I think, to read too much into. Standard Bank will have their reasons for doing so.
Well, something that is not too difficult for you, your stock pick for today.
Certainly. So I wanted to talk about Visa today. It's obviously a company that almost everyone will be familiar with. The reason I like Visa is often, you know, we'll talk about growth stocks and exciting new companies, right? And I think a company like Visa, a mature and established and really large company, can form a nice sort of counterbalance in a portfolio that has some more growth-oriented stocks. Especially when we look at, you know, you've got a country like the US, right? A massive portion of their GDP comes from consumer consumption, right? And we like a company that provides the rails and is an integral part of that consumption. The values we're talking about are obviously massive. Yes, there are risks to a company like Visa or a MasterCard, right? You know, one of the big risks would be cryptocurrency. Does sort of the nature of day-to-day payments change? I think it is a longer-term risk that I'm sure they're looking at. But, you know, if we look at the short term, these companies have massive scale, and I think in terms of barriers to entry, it's very difficult, or it's not so easy to change the way that people behave and the way that these financial institutions interact. So I think they have quite a big barrier to entry versus, say, cryptocurrencies becoming a medium of exchange. But a very exciting company. You know, they're probably unlikely to produce a 40% return in a year, but generally quite stable. You know, we know that there's going to be cash flows there. We know that people are going to be transacting using their cards. And a company that we really like.
All right. Well, let us swipe out of here. Thank you so much for your time. That was Jordan Toy from Legacy Family Wealth.